Having and building a good relationship with money and understanding how to set up your future self with your decisions today is one of the most beneficial things you can do to ensure you are steering your future down the right path. What is investing in the stock market? Investing in stocks means buying shares of ownership in a public company. Those small shares are known as the company's stock, and by investing in that stock, you are hoping the company grows and performs well over time. When that happens, your shares may become more valuable, and other investors may be willing to buy them from you for more than what you paid for them. That means you can earn a profit if you decide to sell them. Investing in the stock market is a long game. A good rule of thumb is to have a diverse investment portfolio and stay invested, even when the market has its ups and downs. One of the best ways for beginners to learn how to invest in stocks is to put money on an online investment account, which can be used to invest in shares of a stock or mutual funds. Here are 5 steps on how to begin that journey and some tips that will be helpful whether you're a beginner or even a long-term investor. The first step is to obtain a steady, reliable stream of income and build up a strong, stable amount of savings. This will allow you to comfortably invest a reasonable sum of money that you will not require for at least a year and not feeling the need to remove that money. This will allow you to invest and not stress if things are going down or retract your money if you need funds for day-to-day expenses. Step 2. Decide on how you want to invest in the stock market. These days, you have several options when it comes to investing, so you can really match your investing style to your knowledge and how much time and energy you want to spend investing. You can spend as much or as little time as you want on investing, and here is your first decision point. How will your money be managed? The first option is a human professional. This is a do-it-for-me option, and it is a great choice for those who want to spend a few minutes a year worrying about investing. It's also a good choice for those who have limited knowledge of investing. And the second is self-managed. This do-it-yourself option is a great choice for those with greater knowledge or those who can devote time to making investment decisions. If you want to select your own stocks or funds, you'll need a brokerage account. Your choice here will shape what kind of account you get and open in the next steps. Step 3. Open an investment brokerage account. So which kind of account do you want to open? Here are your options. If you want a professional to manage your money, a human financial advisor can help you design a stock portfolio and help you with other wealth planning moves such as planning for college expenses. A human advisor typically charges around 1% of your assets annually with a high investment minimum. One big advantage, a human advisor can help you stick to your financial plan and calm your nerves. But if you want to manage your own money, an online broker will allow you to buy stocks and many other kinds of investments, including bonds, exchange-traded funds, or more commonly known as ETFs, mutual funds, options, and more. There is a range of brokers that can offer you no fee commission on stocks, as well as tons of education and research at no additional cost, so you can power up your game quickly. Step 4. Decide what you want to invest in. The next major step is figuring out what you want to invest in. This step can be daunting for many beginners, but if you've opted for a human advisor, it's going to be easy. If you are using an advisor, you won't need to decide what to invest in. That's part of the value offered by these services. If you're choosing to use a brokerage, you'll have to select every investment and make trading decisions. If you can invest in individual stocks or stock funds, among any other assets, the best brokers offer free research to help with this process and offer a ton of resources for beginner aid. If you're managing your own portfolio, you may also decide to invest actively or passively. The key difference between the two is that you determine how long you want to invest. Passive investors generally take a long-term perspective, whilst active investors often trade more frequently. But research shows that passive investors tend to do much better than active investors. So don't be afraid to take the boring and long-term route if you believe that's best for yourself. Step 5. Determine how much you want to invest and make your first purchase. The key to building wealth is to add money to your account over time and let the power of compounding work its magic. This means you'll need to budget money for investing regularly into your monthly or weekly plans. The good news is that it's super simple to get started. A big question is, how much should you invest? How much you invest entirely depends on your budget and time frame. While you may invest whatever you can comfortably afford, experts recommend that you leave your money invested for at least 3 years, and ideally 5 or more, so you can ride out any bumps in the market. If you can't commit to keeping your money invested for at least 3 years without touching it, consider building an emergency fund first, like in step 1. An emergency fund can keep you from having to get out of investments early, allowing you to ride out any fluctuations in the value of your positions and stocks. Another big question is, how much do you need to get started? Most online brokerages these days don't have an account minimum. All the account minimums are extremely low, so you can get started with very little money. Plus, many brokers allow you to buy fractional shares of stocks and ETFs. If you can't buy a full share, you can still buy a portion of one, so you can get started with virtually any amount. Once you've opened your account, deposit money and get started on your investment journey. Those were just 5 steps on how to start and plan out your investment journey. Now here are a few tips that I know would have helped and been valuable to myself when I initially began as well. Whether you're opening a brokerage account or an advisory-led account, your own behavior is your own biggest factor of your success. Probably as important as what stock or fund you buy. Here are 3 important tips for beginners. 1. While Hollywood portrays investors as active traders, you can succeed or even beat out most investors by using a passive buy and hold approach. One strategy is regularly buy an S&P 500 index fund containing America's largest companies and hold on. Tip 2. It can be valuable to track your portfolio, but be careful when the market dips. You'll be tempted to sell your stocks and stray from your long-term plan, hurting your long-term gains in order to feel safe today. Think long-term. Step 3. To keep from spooking yourself out, it can be useful to look at your portfolio only at specific times, say the first of the month, or only at tax time. As you are beginning investing, the financial world can seem daunting. There is a lot to learn. The good news is that you can proceed at your own speed and develop your skills and knowledge, and then proceed when you feel comfortable and ready. In a nutshell, investing is where you commit money for a period of time with the intention of receiving more money in return. You may commit money to another company, a startup, the government, or even an investment property with the intentions of getting more money back than what you put in, or even stocks and shares. It can be a bit more risky than just saving your money, but over a period of time, it can also help you have cash for retirement, buying property, or whatever your intentions may be. A big question is also, why start investing? Life is short, true, but it's not short enough to where your small savings is going to last you through it. No matter your age, young or old, it's never too late to set up your future self or family. Ideally, we'd all like to start investing at birth, but let's face it, many of us don't think about it until we're in our late 20s or 30s, or even we may have missed the opportunities to invest before that. Don't fret. You can become an investor at any age, but every second you wait, you're giving up your greatest asset, time. Bonus, by investing when you are younger, rather than trying to stock away large sums of money later in life, you can give your money a chance to work smarter instead of harder. Ensure you do your research and decide what's best for the path for yourself, and make smart decisions. Do not risk all your savings in a volatile position, and look for professional advice if you feel lost. Hopefully this video has helped you. I know this is the type of videos I was looking for when I began investing in the stock market. So I hope if even just one person sees this and gets value out of the video and begins their own journey, then I know it has been successful. For more finance content, subscribe and leave your thoughts in the comments.